Welcome to Engineering Influence, podcast from the American Council of Engineering Companies, coming to you from our 2025 Convention and Legislative Summit, the big spring event. We've got members all over the Hill today, meeting with their members of Congress to talk about our major policy positions on tax, infrastructure, and workforce, and a lot more. And they're going up to the Hill armed with a lot of good intelligence from our ACEC Research Institute. Glad to welcome back onto the program the wizard of the Institute, our research wizard, Joe Bates. Thanks for coming back.
Thanks for having me, Jeff. Always a pleasure to be
Not
here.
sick of us yet.
No, I love you guys, really. I could do this all day.
Well, we're talking today about the new Q2 2025 Business Sentiment Survey that's just hot off the presses. And this one's kind of interesting because we're catching up to what you're hearing on the news a bit, right?
That's right.
Yeah. What are we hearing?
So, first of all, it's important to explain the timing of the data collection, which was the first and second week of April. Mm-hmm. So the very first email we sent out was the day before Trump announced the tariffs.
Yes.
So we got a reading right there. And then we also looked at these readings for each email that we sent. So I'll come back to that in a few minutes. What we're seeing in this Q2 sentiment that we collected right around that period of time is that current sentiment has certainly softened quite a bit, especially regarding the U.S. economy. Okay. It's still positive, but it's softened quite a bit. What we saw, however, with current industry sentiment is the lowest reading that we have on record. Now, it's still a positive 72. Yeah. So in our net rating system, the best you can have is a plus 100, worse is a negative 100. Yeah. Still exceedingly positive, but it's the lowest reading we had ever on the industry. With firm finances, we're hearing that firms are still holding up fine. They're doing well right now with their finances. They haven't gone below that 80-point net rating, and so they're holding up. So the current sentiment was good, but the real challenge is the future sentiment.
Yeah, and let's make that point even clearer. Even through COVID, when you started doing the sentiment surveys, industry sentiment was always in the plus 80 area, right? And we were always for industry sentiment. Yeah. Even though it's gone down to 72, it's still a very optimistic, feeling within the industry that there is a lot of potential for growth and that the sky is not falling.
Correct.
But it is important to also say that, and we've mentioned this in prior podcasts, that we've done enough sentiment studies that now we can actually start developing trend data.
Correct. So
when you see a trend of constant positive industry momentum, and for the first time seeing a softening on that, where in the level of concern do you think that hits you? Because like you said, that's now.
Correct. Yeah.
So the question is extrapolating that into future sentiment. Do you think it's going to be a long-term thing, or where do you think this is going to fall?
I think the name of the game is uncertainty. Yeah. That's what we've been hearing. And
political and economic.
Political, economic, tariffs, heightened recession concerns, concern about backlog in the next year. We saw for 2 quarters now, we've seen a downward trend in current backlog. Our median in the fourth quarter last year was 12 months, which was great. Let me switch that up. The real concern is backlog at the moment, because we are seeing that in the third quarter of last year, we were at a median backlog of 12 months. Fourth quarter was 11 months. First quarter, 10 months. It's the first time in quite a while that we've seen that median at 10 months. Yeah. And just for perspective, the median during the pandemic was 6.
6, yeah.
Okay, so 11, 12, great, but now we're down to 10. We haven't been there in a while. So there's some indications already that there's some issues. Yeah. And to your point, we've been doing this long enough where we know that future sentiment is not an accurate predictor of what current sentiment will be 12 months from now.
Exactly.
But it is an indicator of concern.
Mm-hmm.
And so I watch the current sentiment much more closely, and it's still concerning.
Yeah.
You know, the future sentiment has literally fallen off a cliff, just showing the heightened anxiety there is in the industry right now.
But it's not all doom and gloom. There are, and I think this is the importance of why everybody's here this week, right? There are some things that Congress can do that would help shore up that certainty. Namely, I think what it was 67 plus 67 or 67% of firms think extension of the Tax Cuts and Jobs Act is a critical thing that Congress can do for the
Correct.
industry.
2/3. Yeah, absolutely. And there's a lot of firms who it actually doesn't apply to, right? A lot of these tax cuts don't apply to them because of the way their ownership is structured.
Yeah, they're an ESOP or they're something. Yeah.
Exactly. So, you know, it's a super majority of firms are saying we definitely want an extension of the Tax Cut and Jobs Act. We want that certainty at least, right? I mean, we don't need any more uncertainty thrown into the picture right now.
And that largely is the argument that's being made for, you know, the extension is the fact that, you know, it did so much to inject so much cash into the economy. 82% of engineering firms use that money to hire new employees, that it was really a way for firms to reinvest in themselves, to hire new people, to hire, to invest in technology, really just be able to grow. And to be able to have that certainty moving forward gives them the ability to say, okay, while there could be some macroeconomic shifts, good chance you'll be able to weather the storm because you're able to have that ability to plan, knowing what your tax bill is going to be.
Yeah, absolutely. It just helps with the certainty. And we also have heard some discussions at this convention about the next infrastructure bill.
Yeah, exactly.
We need that. We absolutely need that because the current one is going to run out in another year and a half or so. Yeah. And that's good to hear that being talked about as well. Because if we get to the end of the IIJA and for some reason the tax cuts for our members specifically aren't extended, that could throw a pretty decent monkey wrench into things of concern, especially. And then you have the broader economy with private sector clients, and are they going to pull back as well because of what tariffs and just other things happening? So there is uncertainty, but you're right. There's things that Congress can do. Yeah. I think there is still concern, though, among members and firm leaders about the long-term deficit because we also know that that's a problem. Yeah. And so I think a concern among some firm leaders is, yes, of course, we want to have these extended. We need to support our industry. Public funding is a huge part of that. Yeah. But we have to be able to pay for it as a country. And then we can't go into $4 trillion more, in debt.
Yeah. And then also the survey did not take into effect the Moody's downgrade, which happened, after. Yeah. So it's going to be interesting to see how that impacts Q3.
Yeah. I think, we obviously need to be concerned with what's happening with our industry, but we don't live in a vacuum. And I say that all the time. Yeah. And so we have to also look at what's happening in that broader scheme of the U.S. economy. And we need to make sure that that's healthy.
Yeah, absolutely. Now, looking at market sectors, even though there's some uncertainty out there on the policy side for infrastructure, for tax, quite honestly, where we are right now is we have a president who's all about American manufacturing, trying to bring that back to the United States. We've seen a big push of promises made for high-tech manufacturing, especially when it comes to semiconductors and the whole who's going to be owning the AI data. America is should own the AI data revolution. That's going to require data centers. That's going to require a lot of private investment. Are you seeing any shifts in the data center market? Is that still high? What industry sectors are leading the charge?
Sure. So relatively speaking, data centers still at the top. Yeah. Energy utilities also at the top. Those two are very much combined, in many ways. So those are continuing to do very well in
Yeah.
terms of current sentiment and future sentiment. We also still see that transportation, those various sectors affected by the IIJA, they're still holding up extremely well also. And water and wastewater, that's another one. So those are the best performing sectors in terms of sentiment. And the market data that ACEC collects with Thomas and Diana, those just back up the sentiment. What we're seeing in softness is there's still softness in real estate, although it's kind of as low as it has been. It's probably, knock on wood, not going to go lower, but we're still not seeing that recovery that we've been hoping to see.
And that's where tariffs can impact. I mean, when you
tariffs,
especially residential construction, wood, all those materials.
And interest rates.
Yeah, and interest rates. Yeah, exactly. That's going to keep that area kind of soft.
Also, supply of homes, so either new or resell. That's still constrained, although we're starting to see that loosen up a little bit as people start to feel like, well, we're not going to get back to 3% interest mortgage rates again. That's just not going to happen in the foreseeable future. So people are starting to adjust to that. But there's
the psychology of the market, right? I mean, there's a point where you just have to accept a new normal, right?
Exactly.
Everybody's expecting a rate cut, but at the same time, it's like, are we ever going to get it's just so amazing. The days of free money are pretty much gone.
Yeah. You know, if I had been a true wizard and had been able to see the future, I would have probably borrowed $1 million at 2.5% and then invested that. Yeah,
exactly. And just, compared to what it is now, I mean, there is a lot out there that I could see that, supporting a lot of the optimism in transportation, even though the IIJA is coming down to an end, you still have, a president and a Congress that's pretty anti-regulation. You have a lot of streamlining permitting, a lot of regulatory, moves to deregulate. And that's going to make things a lot easier for those firms to actually do business in that sector.
I think there's another concern, though. There are a lot of our members who are focusing on resiliency and environmental buildings and just the renewable energy. Like there are a lot of members who are focusing on that. And so I was happy to hear in the convention keynotes that, hey, the administration says we want an all of the above policy. I think that's absolutely the right approach. We shouldn't be picking winners and losers, but we should be making sure we have a diversified energy infrastructure.
As Chris LaCivita, his co-campaign manager said for the Trump administration, it's all how you pitch it, right? If you talk about green energy or wind, if you put it into the all of the above American energy, he'll support that, and that'll be pushed.
Apparently, other than wind.
Apparently, Trump hates wind.
I don't want to
kills the birds and not
suspect why that is.
I know, but
he doesn't like wind.
He doesn't like wind. Oh well. So Q2's out. I imagine you're preparing the next survey for Q3.
So we have a really big announcement here.
Okay.
And that is that we're going to start doing mid-quarter updates.
Okay.
Because things are changing so quickly. And even in the polling this morning of the audience, it's much different than what I have from Q2 sentiment readings just 5-6 weeks ago.
So we're going to be ramping up the analysis.
Exactly. We're going to do a mid-quarter survey. It's going to be an abbreviated survey, but get some of those key pulse metrics. We're going to do that the first week of June, and we're going to release it the second week of June. So also a very quick turnaround because it's timely right now. And then, of course, we'll be working on Q3. That's going to be probably late July this year because we're going to use that. And then the next mid-quarter is what we'll share at fall conference.
Fantastic. Well, you are always busy. There's never a free moment. We're going to fill it with research. But Joe, thank you again for giving us a kind of a preview of the Q2 report. That'll be released publicly this convention, and we'll make sure
it's up on the website.
It's up on the website right now, and we'll be putting out the public release on that soon. And we will be following up for Q3 and the mid-quarter updates. So, again, thanks for coming on.
And, Jeff, I just want to say thank thank you again to all of our sponsors.
Oh,
all
absolutely.
of the donors.
Yeah.
We just cannot do all of this wonderful research. We cannot conduct it without the support of all of our donors. And so, we really just thank them from the bottom of our hearts. And if anyone listening to this, if your company isn't donating yet, please consider. We'll take almost any amount as a donation.
Well, the value's there. I mean, I think it's amazing to see what the Institute's done in 5 years. Going from concept to COVID to post-COVID to our reality now. It's just been amazing to see its growth.
Yep. Absolutely.
Fantastic. And again, this has been Engineering Influence, a podcast from the American Council of Engineering Companies, and we'll see you next time.